All right, let's dive into these Senco Gold Q2 FY25 results. I know a lot of you have been asking for a deep dive on this one. So we're going to go through it together today. This is an Indian jewelry retailer, as you may know, publicly traded on the NSE and BSE. And we've got some interesting stuff to go through here. We've got their investor presentation, a letter to the stock exchange, and their unaudited financial results for Q2. So lot to dig into. We really want to get a good understanding of how they performed, what's working well, and what we should be looking out for in the future.
Yeah, and I think it's especially interesting to see how their performance kind of reflects the broader Indian economy as well. We've got these trends in consumer behavior, the overall economic conditions. All of that's going to be reflected in these numbers, so I think it's good to keep the bigger picture in mind as we go through this stuff.
Yeah, for sure. So maybe let's just jump right in with kind of the headline number that caught everyone's attention. They hit record sales in October, exceeding 10,000 crore. That's about $121 million USD for those of you who don't work with crores. And this was all during the festive season, so really important time for them. And it represents something like a 14 to 15% increase from the same period last year.
Yeah, that's pretty remarkable growth, especially when you consider the jewelry market's very sensitive to, overall consumer sentiment and economic health. So that kind of growth really suggests, I think, that there's a sense of, maybe optimism or at least confidence in the Indian consumer market right now.
Yeah, definitely. People are willing to spend. So let's take a closer look at the detailed Q2 and H1 FY25 results. We can kind of unpack some specifics from their investor presentation and financial statements here.
Yeah, I mean, think of these statements kind of like a company's report card, right?
Hmm.
Gives you a glimpse into their financial health and how they're doing. And yeah, I mean, in Senco Gold's case, looks like they're getting pretty good grades.
For sure, yeah. So Q2 FY25, their revenue grew by an impressive 31% year on year, reached 15,004.87 million. And for the first half of the fiscal year, H1 FY25, revenue climbed 18% year on year, hit 29,043.76 million.
And it's not just about revenue growth. We need to look at profitability, right? So two key metrics to focus on are EBITDA and PAT. EBITDA stands for earnings before interest, taxes, depreciation, amortization. So basically tells us about the company's operating profitability, like how efficiently they're running their core business. And then PAT, which is profit after tax. This is like the bottom line, the actual profit that's left for the company after all the expenses and taxes are paid.
Right, so how did they do? Well, in Q2, their EBITDA soared by 32% year on year to 519.23 million. And for H1, EBITDA jumped a remarkable 51% year on year, reached 1,606.62 million. And then, get this, their H1 PAT showed a 60% improvement year on year, hitting 633.94 million.
Wow, yeah, those are some really strong numbers. It's a good sign that they're not just growing their revenue, they're also becoming more profitable. Like that 51% increase in H1 EBITDA, that suggests that they're managing costs efficiently, squeezing more profit out of each sale. That's something investors are really going to like to see.
Exactly, yeah. So, let's dig into kind of what's fueling this growth. In the investor presentation, the CEO, Suvankar Sen, he highlighted a couple of interesting factors. He pointed to volume growth in gold jewelry sales, up 7% year on year, and then also value growth with gold jewelry sales up 30% year on year and diamond jewelry sales up 9% year on year.
So it seems like, people are not only buying more, but they're buying more expensive pieces. Makes you wonder, is that driven by rising incomes? Or maybe even, people viewing gold as kind of a safe haven in uncertain economic times. I think that's something that, might be worth considering as we look at these numbers.
Yeah, that's a really good point, especially in today's environment. And it's also interesting. They highlighted their performance in what they call Tier 3 and Tier 4 towns. So these are smaller cities and rural areas where their franchise stores have really been taking off.
Yeah, that's really interesting. Could be a sign of, rising disposable incomes and that growing appetite for branded jewelry in these areas, right?
Yeah.
I think it suggests that Senco Gold might have tapped into a market that maybe some other companies are overlooking.
Yeah, it's like they've discovered a whole new customer base. And speaking of strong performance, let's look at same-store sales growth, or SSSG. They saw a 17% year-on-year increase in Q2.
Yeah, that's a crucial metric, right? It tells us that it's not just the new stores that are driving growth, it's their existing stores are also performing really well. So that suggests, their brand is resonating with shoppers, their products are good, their customer service is good, they're creating loyal customers, it seems like.
Yeah, seems like they have a good thing going. Now, one more point that the CEO mentioned that I thought was interesting was the impact of the recent customs duty cut on gold by the Indian government. So it appears that this move really boosted consumer demand, made gold more affordable, and definitely played a role in those strong Q2 results.
Yeah, that makes sense, right? Lower import costs for jewelers, potentially lower prices for consumers, and then that fuels demand even further. I think it's a really interesting example of how government policies can have these ripple effects on the market. But the question is relying on external factors like duty cuts, sustainable in the long run? Like, what happens if those policies change?
That's a really good point. So speaking of things that can impact the jewelry business, let's turn to a topic that always gives people a little bit of anxiety: gold price volatility.
Right. It's been quite a ride for gold prices over the past 18 months, and that puts a lot of pressure on companies to manage their working capital effectively, right? All
Yeah.
that cash they need to keep things running smoothly.
Yeah.
And Senco Gold CFO, Sanjay Banka, he shared some insights into how they're handling this volatility.
Yeah, so he explained that to prepare for the festive season, they increased their inventory by 18% to 20,624 million, clearly anticipating a lot of demand. And, I think even more importantly, they have a very robust hedging policy in place with a 91% average hedging ratio, or AHR, to really try to mitigate those price fluctuations.
hmm So hedging is like an insurance policy against those unpredictable swings in gold prices, right?
Right.
It allows companies to lock in a price for gold in advance so they're less vulnerable to those
Yeah.
sudden market changes. It's a way to smooth out the bumps and make profits more predictable.
Yeah.
Of course, any insurance policy comes with a cost. So that's something we have to look into. Are they paying too much for this peace of mind? It's a question worth asking.
Yeah, it's like anything, what's the trade-off here? Now, before we move on, hedging is a term that gets thrown around a lot. But maybe for our listeners who aren't as familiar with, financial terminology, could you break down exactly what that entails?
Yeah, absolutely. So imagine you're Senco Gold, and you need a large quantity of gold in, let's say, the next few months to make your jewelry. And you're worried that the price of gold might, suddenly shoot up,
Mm.
and that would eat into your profits, right?
Hmm.
So what hedging does is it allows you to enter into a contract today to buy that gold at a set price in the future. So it's like pre-ordering your ingredients, right? You're fixing the price so you don't get caught off guard by sudden market fluctuations. So if the price goes up, you've locked in a lower rate, you protected your margins. If the price goes down, well, you might miss out on some potential savings, but you still got that stability and predictability.
Okay, yeah, that makes a lot more sense. It's kind of like, peace of mind, I guess.
Exactly.
So we've seen that they're managing this price volatility, they're seeing strong growth, their financials look good. What's next for them?
Well, one of their big focuses right now is expansion. Uh, in the first half of FY25 alone, they opened 8 new showrooms, 6 company-owned and 2 franchisees. So that's a pretty aggressive pace.
Yeah, it is. And they're not slowing down. They've got a whole pipeline of both company-owned and franchise showrooms planned to hit their annual targets.
hmm It seems like they've got a two-brick-pronged approach to growth, right?
Right.
So with the company-owned stores, they keep tight control over the brand, over the customer experience. But then, by using the franchise model, they can expand quickly with less upfront investment. So, there are potential benefits and risks to that kind of strategy.
Yeah, it's like, can they maintain this pace without, sacrificing quality or restricting themselves too thin? There's a lot to consider there. So we're going to explore all of that and more as we continue our deep dive in part 2.
Yeah, we'll also delve deeper into some of the potential challenges they face. Competition's always a factor, changing consumer tastes.
Yeah.
There's a lot more to uncover, so stay tuned.
Okay, so welcome back to our deep dive into Senco Gold's Q2 FY25 performance. Last we left off, we were talking about those ambitious expansion plans and kind of like the potential risks and rewards that go along with that kind of strategy.
Right, and it's not, like they're just throwing darts at a map and saying, oh, let's open a store here. It seems like they're being pretty strategic with it. They're paying attention to market dynamics and consumer behavior.
Hmm.
And we can actually see how that's playing out when we look at the numbers.
Yeah, for sure. So let's maybe highlight some of those key metrics that they talked about in the investor presentation. One that really stood out to me was the average selling price, or ASP, for their jewelry. It's been steadily increasing, reaching 41,600 in the first half of FY25.
That's a pretty significant jump from the 36,600 ASP they had in FY24. So tells us that customers are, gravitating towards higher priced items. Could be like shift in taste, maybe people wanting more intricate designs, or maybe it's that perception of gold as a safe haven, like we were talking about before.
Right, right. That makes sense. And on top of that, the average ticket value, or ATV, has also climbed to 74,300 in H1 FY25,
Ah.
up from 57,900 in FY24. So it's not just that people are buying more expensive pieces, they're also buying more items per transaction.
Oh, wow. Yeah, that's great for their profitability. More items, higher prices, that all adds up. And it really aligns with that whole focus on expanding into tier 3 and tier 4 towns. Where we're seeing those rising disposable incomes and that growing desire for like branded jewelry.
It's like they found that sweet spot, this customer base that's eager to spend on like quality products and products that are kind of like aspirational, you know?
Yeah, definitely.
Okay, so let's shift gears a bit. Let's talk about inventory management. We touched on this in part one, but the CFO, Sanjay Banka, he really stressed the importance of their hedging policy, especially in navigating those like unpredictable gold price swings.
Right. He mentioned that they've been consistently maintaining a high average hedging ratio, or AHR, reaching 91% in H1 FY25. So basically, they're taking steps to protect themselves from potential losses due to changes in the price of gold.
Right, and I know we talked about hedging a little bit earlier, but could you maybe break it down even further? And, for those listeners who might not be like fluent in financial jargon.
Sure, yeah. Imagine you're running a business that relies heavily on one key ingredient. Let's say, you're running a bakery and you need flour. What happens if the price of flour suddenly goes way up? It's going to mess up your whole budget, right? Could even impact your ability to make a profit.
Yeah, for sure. It'd be like trying to bake a cake without knowing how much the ingredients are going to cost.
Exactly. So hedging is a way for businesses like Senco Gold to minimize their exposure to those price fluctuations. They basically lock in a price for gold in advance, even if the market price goes up later on.
So it's like you're pre-ordering your flour at a fixed price, so you can like budget accordingly. And you're not going to be caught off guard by like these sudden price hikes.
Precisely. And Senco Gold, they use a combination of what are called unfixed gold metal loans, or GMLs, and derivative contracts on the multi-commodity exchange, or MCX, to achieve that high hedging ratio. So those are like financial tools that help them lock in those gold prices.
Okay, and this strategy's actually like earned them some recognition, right?
Yeah, it has. They were recognized as a leading hedger in bullion by MCX.
Yeah.
So that really highlights their expertise in managing the risks that come with, working with such a volatile commodity like gold.
Yeah, it's not just like riding the wave, they're actually being proactive and trying to like control their destiny a little bit.
Exactly.
Okay, so we've talked about like managing those external factors, but let's zoom in on their like overall financial health for a second. The investor presentation gives us a pretty clear picture of like their profitability and stability.
Right. And their EBITDA margin, which we talked about earlier, that measure of operating profitability, has remained consistently strong, like around that 7-8% range for the past few years. So suggests they're managing costs well and generating a healthy profit from their core business.
Yeah, that's a good sign. And their return ratios, like return on equity or ROE and return on capital employed, or ROCE, those have also been trending up.
Yeah, those are like key indicators of how efficiently they're using their resources to generate profit. Higher ROE and ROCE, that suggests they're making smart decisions about like how they deploy their capital, their assets, creating value for shareholders, which is what you want to see.
Right. Okay, so all signs point to like a healthy and growing business. But what about their debt levels? Are they taking on too much risk to fuel all this expansion?
Yeah, that's a crucial question. You always want to be mindful of that, but based on what we're seeing, it seems like they're being pretty prudent about it.
Yeah.
Their debt to equity ratios remained relatively stable, so they're not like going on a crazy borrowing spree to fund their growth.
Okay, good. It's good to hear that they're like striking that balance.
Yeah.
Between growth and stability.
Yeah, exactly. Like building a solid foundation, not house of cards.
I like that analogy. Okay, so before we wrap up this part and head into the final part of our deep dive, let's just like pause for a second and recap what we've learned so far.
Okay, so big picture. Senco Gold seems to be like firing on all cylinders, right?
Yeah.
Record-breaking sales, strategic expansion plan that's gaining traction. Their financial performance is looking really strong. And it seems like a lot of this success comes from, that deep understanding of the Indian jewelry market. focusing on those evolving consumer preferences and being really smart about their financial management.
Yeah, I totally agree. They've managed to tap into that like aspirational market,
Yeah.
especially in those tier 3 and tier 4 towns. And they're also like skillfully navigating the challenges of that gold price volatility, through that
Hmm.
sophisticated hedging strategy. So, all of these factors are pointing towards like a pretty positive outlook for their future.
Absolutely. But, you know, no business is without its risks. So in part three, we're going to dive into some of the potential challenges and considerations that investors should keep in mind.
Yeah, for sure. Stay tuned for part 3. We'll wrap up our deep dive into Senco Gold's Q2 FY25 performance, and we'll leave you with some like thought-provoking insights to ponder as you continue your own research. Okay, so we're back for the final part of our deep dive into Senco Gold's Q2 FY25 performance. And we've covered a lot of ground. We've talked about their sales, their expansion, their financials, all looking really good. But as with any investment, it's important to also consider the potential challenges and risks that might be out there.
Yeah, for sure. I mean, it's easy to get caught up in all the positive news and the hype, but we got to take a step back and look at the bigger picture. What are some of the factors that could potentially impact Senco Gold's performance moving forward?
Well, I mean, one thing that jumps out at me is just like the inherent volatility of the gold market, right? I mean, as good as their hedging strategy is, could there still be like significant swings in gold prices that really impact their profitability?
Yeah, that's definitely a key consideration. I mean, hedging helps, but it's not a foolproof solution, right? If gold prices were to, take a prolonged dip, that could put some serious pressure on their margins.
For sure. Yeah, that's always a risk with commodities. Another thing I'm thinking about is the competitive landscape. I mean, the Indian jewelry market is it's pretty crowded. You got established players, you got up and coming brands. So how can Senco Gold like really differentiate themselves and hold on to their market share in that kind of environment?
Right, competition is always a factor, no matter what industry you're in. I think what matters is like how a company sets itself apart. And like we talk about, their focus on those tier 3 and tier 4 towns, that could be a really smart move because brand loyalty might not be as strong in those areas. But they're going to have to offer something special, something unique to really attract and keep those customers.
Yeah, you got to give people a reason to choose you, right?
Exactly.
And speaking of attracting customers, they've been expanding their product offerings, like coming out with new designs and collections, trying to like cater to those evolving tastes. But is that enough to like stay ahead of the curve?
Well, it's a good start, but consumer preferences are always changing, especially among younger generations.
Hmm.
So Seiko Gold is going to have to like anticipate those shifts
Yep.
and be ready to respond with even more innovative designs and experiences, something that really resonates with their target audience.
Yeah, you got to keep things fresh, keep people excited. Now, another potential challenge that I see is just managing that rapid growth, because expanding too quickly, that can put a strain on your resources. It can lead to like operational inefficiencies. So how can they avoid those growing pains and make sure that they can scale sustainably?
That's a great point. Rapid expansion can definitely put a strain on things like infrastructure, supply chains, management systems. Senko Gold's going to need to make sure that all those pieces can keep up with, their ambitious growth plans.
Yeah, it's like you can't just build the storefront, right? You got to have everything behind the scenes working smoothly too.
Right, exactly.
And then of course we can't forget about the broader macroeconomic environment, right? I mean things like economic slowdowns, inflation, shifts in consumer spending, all of that can have an impact on Senco Gold's performance, no matter how well they're doing internally.
Yeah, those are the external factors that are really tough to control. I think what matters is like how a company adapts and responds to those challenges. And based on what we've seen so far, Senco Gold seems to have a pretty good track record of like sound financial management and making strategic decisions. So that gives me some confidence that they're well equipped to navigate those uncertain waters.
Yeah, hopefully they can weather the storm, so to speak. So, okay, we've talked about a lot of different things here, but what does it all mean for our listeners? If someone is considering investing in Senco Gold, or maybe they just want to like follow their journey, what are some things that they should be watching for in the coming quarters?
Okay, so a few things to keep in mind. First, I would say keep an eye on how they manage that gold price volatility, right? Like we said, their hedging policy seems solid. But if there are any signs of weakness there, that could definitely impact their bottom line.
Yeah, makes sense.
Second, I would say pay attention to their expansion strategy. Can they replicate their success in new markets? Are they managing those challenges of rapid growth effectively? Those are key questions.
Yeah, you don't want them to get ahead of themselves.
Right. And then third, I would say watch their product innovation and their marketing efforts. Are they staying ahead of those consumer trends? Are they communicating their brand value effectively to their target audience? Those are really important factors.
Definitely. And and lastly, I guess just watch how they navigate that broader economic environment, right? Can they adapt to changing consumer behavior, changing market conditions?
Exactly. I mean, investing always involves risk,
Right.
right? But if you carefully consider those potential challenges and opportunities, you can make more informed decisions that align with your investment goals.
Well said. Well said. Okay, so that brings us to the end of our deep dive into Senco Gold's Q2 FY25 results. It's been a really interesting journey, getting to like uncover the story behind the numbers and really understand what's driving their success.
Yeah, I agree. And, hopefully this deep dive has given our listeners a better understanding of Senco Gold, both their current performance and their future prospects.
Yeah.
But, this is just the beginning, right? We always encourage our listeners to dig deeper into that source material. Check out that investor presentation, that letter to the stock exchange, those unaudited financials. There's always more to learn.
Yeah, absolutely. And as you continue your research, here's a final thought-provoking question for you to consider. Given Senco Gold's impressive growth, could they actually become the #1 jewelry brand in India? And if so, like what would it take? What kind of strategic moves would they need to make to achieve that goal?
Yeah, those are great questions. Definitely worth pondering.
Well, on that note, we're going to wrap things up here. But as always, keep diving deep, folks. We'll see you next time.